Tyler Winklevoss recently accused JPMorgan of trying to kill Gemini crypto companies in 2024. This surprising attack follows JPMorgan's plan to impose new fees on fintechs accessing customer data. These fees threaten vital services like Plaid, which links bank accounts to apps and Gemini Exchange. Without free access, many fintech firms could collapse, impacting major platforms like Gemini Crypto and Coinbase. Winklevoss warns these fees may stifle innovation and deny Americans new Gemini crypto opportunities. But why is JP Morgan pushing this when data sharing fuels decentralized finance growth? The answer lies in battles over the open banking rule, requiring banks to share data through third-party apps. Banks claim this rule exceeds the Consumer Financial Protection Bureau's authority. They argue forced data sharing creates regulatory burdens and privacy risks. Fintech founders see this as harmful regulatory capture, where banks misuse rules to suppress competition. This fight could reshape how cryptocurrencies like Bitcoin Gemini and Ethereum Gemini are funded and used in the US. Imagine a crypto market where Gemini Exchange cannot verify or fund accounts easily due to bank restrictions. Gemini Earn relies heavily on seamless funding through data services, making these new fees critical. Such obstacles frustrate users and may reduce liquidity in stablecoins and other crypto assets. How will this affect Gemini crypto market dynamics in 2024 amid rising adoption and institutional interest? The implications might be worse than many expect. Access to real-time banking data is crucial for many Gemini crypto services, including Gemini Wallet and Gemini App. Fintech platforms enable crypto wallets, DeFi apps, and Gemini staking services to connect with traditional finance. If banks limit these data pipelines, Gemini crypto security and innovation face significant setbacks. Innovation thrives on accessibility. Removing open banking freedoms could push Gemini crypto development overseas or toward decentralized alternatives. This crackdown might trigger a major shift in where and how Gemini crypto operates worldwide. The legal battle intensifies because the Consumer Financial Protection Bureau may scrap the open banking rule by May. This would revoke banks' obligations to share data freely with fintech providers. For cryptocurrency companies like Gemini Exchange, this is catastrophic, especially for those relying on instant bank-to-wallet transfers. Winklevoss emphasizes that without regulatory support, the US risks falling behind in blockchain technology and DeFi. Could this opposition aim to slow DeFi's explosive growth before challenging traditional banking control? With JP Morgan's dominant role, their resistance signals a larger power struggle. Banks see fintech and Gemini crypto platforms as threats to their dominance. Instituting fees for data access is a tactic to protect legacy systems, but this could backfire by stifling consumer choice and limiting Gemini crypto market innovation. Investors and traders should watch closely as regulatory shifts shape the entire Gemini crypto ecosystem's future. I personally trade on a rock-solid crypto exchange, boasting consistently ultra-low fees. Its deep liquidity ensures instant order fills, plus lightning-fast withdrawals keep funds flexible. Tap the special link in the description below today and unlock exclusive sign-up rewards. Here's a key question. Will Gemini crypto users accept slower, costlier transactions due to bank-backed Gemini fees? Or will this spark blockchain alternatives that bypass centralized finance altogether? This tension marks a crossroads for Gemini crypto's development trajectory in North America. Staying informed is crucial since these battles directly affect Gemini Exchange usability, DeFi participation, and new product launches. If you're following Gemini Crypto, Coinbase, or other exchanges, these regulatory challenges are front and center. Their ability to onboard and fund accounts hinges on open banking data access. The introduction of fees threatens to reduce funding speed and increase operational costs. Lower liquidity and slower fund transfers on the Gemini Crypto app could cause price volatility in Bitcoin Gemini and Ethereum Gemini markets. This domino effect impacts investors and the broader decentralized ecosystem's health. Before moving on, hit like and subscribe for the latest updates on Gemini crypto regulations. Share your thoughts below. How will this influence Gemini NFT innovation in 2024? Now, let's pivot to how this conflict impacts fintech's broader role in Gemini crypto adoption. The fintech sector has catalyzed mainstream Gemini crypto use by bridging traditional finance with digital assets. Services like Plaid connect bank accounts to wallets, enabling seamless Gemini crypto trading and Gemini staking. If JP Morgan's policy spreads, fintech startups might lose revenue or shut down. This could freeze many retail investors out of the Gemini crypto market, harming adoption. It's rare when a banking giant's influence threatens blockchain innovation at scale. What's more concerning is the opaque nature of these policy shifts and their implementation. The regulators' withdrawal of the open banking rule might embolden other banks to follow JP Morgan's path. Such moves increase friction between users and their Gemini crypto holdings in Gemini Wallet and app. Consequently, DeFi protocols might gain appeal as technically independent alternatives. Yet, traditional, user-friendly onboarding remains critical for mass Gemini crypto adoption. The fight over data access isn't just about banking. It's about controlling financial innovation. Institutions like JPMorgan want control by limiting access to critical infrastructure. Meanwhile, founders like the Winklevoss twins warn these tactics harm innovation and consumers alike. This conflict may define whether 2024 becomes a breakthrough or setback for Gemini crypto's mainstream journey. In closing, these developments spotlight the fragile balance between regulation and innovation in Gemini crypto's future. JP Morgan's actions against Gemini crypto and fintech challenge open access and decentralization principles. Watching the regulatory environment is vital for anyone serious about Gemini crypto investing or development. Staying updated and engaged gives you an edge in this fast-evolving Gemini crypto market. Don't forget to like, subscribe, and comment your views on how banking giants shape Gemini crypto's fate this year. I personally trade on a rock-solid crypto exchange, boasting consistently ultra-low fees. Its deep liquidity ensures instant order fills, plus lightning-fast withdrawals keep funds flexible. Tap the special link in the description below today and unlock exclusive sign-up rewards. The battle between traditional finance and groundbreaking DeFi innovation is heating up, and every Gemini crypto enthusiast should stay tuned.